half, I think investors are a little bit disappointed in US dollar terms. A global bond portfolio sort of benchmarked would have been down about 0.4% overall, with the UK market being probably the worst performer, slightly positive in the US and negative in the Eurozone and Japan. Second half, we still see interest rate pressure. We expect in the US the yield curve to steepen further. There were expectations that US rates would come down this year. Those expectations now are fully discounted. Rates are on hold till end of the year. First opportunity for them to come down is probably middle of next year, and therefore when you've got some other issues going on in terms of credit defaults possibly and widening spreads, we would say that the bond market outlook for the second half of the year is not particularly positive. Well, less than 2% of total allocation in MPF is actually moved towards or invested in dedicated bond funds, but that sort of doesn't tell the true picture. The true picture is, if you look at the mixed asset funds, which are over half of MPF, they have anywhere between 20 to 80% invested in fixed income. So it will have an impact overall on the picture for those mixed asset funds, but we expect the growth in the global economy to continue, equity markets to stay relatively strong, and therefore the slight deterioration in the bond conditions should be overwhelmed by the strong performance we're expecting in the equity markets. We think overall more choice is a positive. We think investors now have had good experience in the MPF system. I think the performance differentials between some of the providers are starting to be exposed, and I think in the spirit of providing free choice, that it's a good idea to look at ways in which different members in different schemes can participate with different funds. It's an interesting situation at the moment, I would say, because bonds have traditionally been the less risky option, but now with bond volatility increasing, it doesn't necessarily represent that low risk option. So what choices do the investors have? And typically if they're going to come out of something, they're going to go into something, they're going to go into equity funds, possibly into more risky choices. So our advice is to stay in the mixed asset funds at the moment, but really understand what the fund managers are doing with that bond exposure so that the expectations are set reasonably.